Good morning, everyone, and welcome to the European crossover. And we've seen, failed attempted breakout by the euro. Crude oil's pressing right here at a key level, which is 33.83. I noted that on the inside call. We have 33.94 on the 30-minute, which is pretty key. I was thinking they might go to 33.94 before they took a dip. They ran just out of gas now, but they're holding up overall. So we'll go and take a look at that. On the event calendar, Eurozone sentiment overall came in line, but a little bit weaker. Service sentiment, a little bit weaker. Okay, German inflation is not till 8 a.m. Eastern time. And we have U.S. GDP at 8:30 Eastern, along with personal income. We do have Michigan consumer confidence, but that's only the final number, so it's not the flash number. So right now, I mean, we were looking at the euro, and I thought we'd at least make a move to 1070, and I thought, as discussed with Pixar, is that we'd see uh, that might see a pause at 1070, but definitely some shorts come in around 1118. Not saying it couldn't get past 1118, but I thought we'd have a tough time sustaining any move above 1118. And we didn't even make it to 1070, and this market is just not looking good. And as I mentioned early on, yesterday on Twitter, you're going to have a catalyst, and we just don't have the catalyst. And when I was looking for a breakout 3 weeks ago, I mean, you could already see the momentum, the strength building up in the yen and building up in the CAD, and they're already making their moves. And it was just a matter of time. You could sense the way the euro was building up steam, and that it was a good chance it could just bust out, and bust out it did. Literally just a few hours later. Me and Blake discussed that. So I think people thought the same thing was going to happen, and that's just not the case because too many people are watching. They're looking for it. On top of that, there's no real catalyst. And then to put a little bit of extra meat on the bone, that story that came out 3 days, I think it was 3 days ago, that 45% of German bonds are not eligible for QE. And at the time, the euro was advancing. If you remember, that was the day that I was looking for the euro to bottom at 964. I guess it was Wednesday, in that area. And that when we rallied, I said it's probably good for 50, 75 pips. And we hit 1034. I said, hey, sell into it in this 1034 area. And we backed off from that. But then we reassured ourselves, and we were getting up there in the 1040 when we were actually holding steady probably around 1030-ish. When the news, or in the mid to high 1020s, and the news broke out, and we were only able to lop on an extra 15, 18 pips on that news, which should have really vaulted the euro up at least 50 pips. At least should have pushed us up to the upper 110s. And all we could do was, throw on pack on another 15, 18 pips. So that pretty much told you that there was going to be a false break. You have to listen. It reminds me of, you think about those old Western movies where you see the American Indian put his ear to the ground, and he can hear if horses coming, as far as like let's say the cavalry's coming or something, or hear a train coming or whatever, and you have to listen to those sounds. I mean, you can. It's not a matter of being prescient and knowing where you think a market can go. You use all those tools to your advantage, and not necessarily technical tools, but one of the key things that you can look for is the way a market can react to news. So the idea that if the euro was selling off when that news came out, that'd be one thing. But the euro had already rallied, it had already backed off a little bit, not a whole lot, but it backed off. And when that news came out, the euro had a chance to really reassert itself and knocked out a lot of people that might have may have just got short and had their stops at, into the 1040s, the 1050s, maybe low 1060s. You could have easily knocked those people out and made a run up to the upper 1070s. I'd say realistically probably about the upper 1080s, maybe 1090. Really knocked off a lot of people. And the fact that we could only, throw on an extra 15, 18 pips pretty much told you what was happening in this market. That's why yesterday when I said people were looking for a breakout, and I said, you know what, you're more apt to see, I'm looking for a false breakout. And even then I thought that we'd push higher. I thought the 1070 would just be like a pause. Like the market would stutter step at 1070, maybe back off to the upper 1040s, and then try and reassert itself, and then make a move towards that 1118, which I thought you'd start to see some wholesale shorting. But we couldn't even make it to 1070, and here we are dithering at 1020. We're actually just a little while ago like at 1010. Those are some of the things I refer to when I'm saying, the theme of the market. So if you use that to your advantage, at the very least, you didn't get long the frickin' market. And if you were aggressive, maybe even shorted it. But at least you saved yourself some money. I mean, if you really like the euro, it's going to be a whole heck of a lot better to buy it down here in the teens. And potentially you could have even bought it here. I even saw it earlier when it was trading at 1008. Than buying up there 1040, 1050. So we'll take a look and see what's going on here. Pedro says, can you talk a bit about the SPOOs for the day? I'm short 1950 calls that expire today, and I'm debating on what to do. Wow. I don't know about 1950. I mean, I had spoken with a trader on Sunday evening, and the SPOOs, which I told you all were trading at 1920, like 24, I think it was. And I said, I'm looking for stated higher. And then I argued the point that, we're in a Goldilocks scenario. So although I was surprised by the pullback, I would have expected worst case scenario would have been about 1908, 05. That would have been my worst case scenario. We did dip. And then when we got down to 1891, I said, I did tweet out, this is way, and I put way oversold. Although when we did steady ourselves, and it dipped a little bit lower, got down to like 1887 or something, maybe 1886, I don't know. But when we got up to like 1910, that's when I said, hey, I would exit out. But obviously the market really went gadzooks and really took off. But my target, what I discussed with that guy, was 1968, and we just hit that 1968. I mean, if it's 1950, the SPOOs futures, that's right, there's support. We can go and take a look at that real quick because it's overall a relatively dead market in these other markets. So hang on one moment. So you can see here on the 30-minute where we hit this 1968. Actually, I think I had 1968 and a half. But I think when I talked to that guy, I just said 1968 even. This might boost the euro up a little bit. G20 headline coming from Scheibel. Scheibel says many in G20 believe there's only little room left for additional monetary measures. That might be a little bit supportive for the euro, because he said overall, he's not saying specifically the ECB. So let's go and take a look here at the SPOOs. So I tweeted this out right when we were trading at 1968.50. I think 68.50, 68.25, and I said, tweeted out to that one gentleman, hey, we've reached our target that we discussed on Sunday, so you had a chance to get short and make some money. Actually, if you got short there, you're already up close to 4 handles. And I never go in and say, get short here, get by. I have no idea what someone's risk tolerance is, and I don't need anybody telling me, you said short there, and I mean, I'm down, let's say it's the SPOOs, I'm down 3 handles, and then I covered, and now look, thanks a lot. So I don't have any idea what your risk tolerance is. I don't know what you trade, and, primarily I'm a scalper, so that's why, I may go in and suggest that it's coming to this target, as I did yesterday. The crude oil market was trading, I believe it was at 32. We were already making a romp, and then it was traded at the 32.70s. And I said, hey, I'm spying, or I'm looking for 33.10 to be the reactionary level. Boom, we made it to 33. I think it was 33.14. Saw a nice sell-off back to like in the 32.70s, good for 40 cents. We reasserted ourselves, and we had a lot of trouble there, in that area. We got above it, made up to 78%, back down, so forth, and we're still, up here. But anyway, getting back to the SPOOs, this is where I came up with this level, to 68.50. You see that? Well, actually, I got here on 69, but I had my target was for 68. There it is, 68.50, yeah. So this is what I came up with right here. And at the time when we were trying to work higher, I thought, well, they'll probably have a little bit of trouble. I remember talking to him in this zone here to back off, but I think they'll make it to 68. I think I probably did tell him 68.50 because, look, that's what I've got lined up here, 68.50. Well, this is where I got it from. I'm looking over here on the 2-hour chart. But you can see we got a nice little zone here. So the market should have a little bit of trouble. You can see here, though, which is 57 to 66, I guess 62.50 or whatever. But we were able to tick up here. So, but the only problem we got now is do they try and give a little bit of an extra boost on the open? I really don't think so. Problem is that you see here, this 50, that's pretty key right there. So the market might have a hard time. We're going into a Friday. You have to look at it. The way I always look at stuff is, so probably a lot of people got short here, so they're going to try and push it. Although I would think, in light of the rally that you saw yesterday, that a lot of people crapped out and just got out of the way. That being said, it doesn't mean that we can't have an upside bias. See, right now, 1949 a quarter would be the 23%. And My guess is you'll probably see the market continue to weaken, but man, I don't know where you put on those shorts. Obviously, you put them on down here. I mean, a lot more value if you sold them up in here. I have no idea where you short them. These levels, I have not even updated my levels. The only thing I've updated my levels for is for crude oil. I haven't even updated levels for Eurodollar. There's really nothing really happening there. Like I said, this 1949 and a quarter is at 23%. The best I think you could realistically hope for is right here, which is 1942, basically 42.75, 42.50. And that'll be a pretty good pullback. It doesn't mean that somehow during the day they couldn't pull back, but the market's going to have a tough time. It's going to be easier for people just to buy on these pullbacks. I think your first area of contention is going to be 52.5. It's probably right here, 52.5. I mean, you'll have some trouble in here at 57.75, but if you can get a dip, my guess is they'll take them down to about 52, yeah, like around 52.50, 52.25. I think the best you can hold. It doesn't mean we can't break them lower. It's just that the momentum's going that way. Now, that being said, anybody that's short, I got to think that they already got the hell out of Dodge. So it's just a matter of how well that they can go and push them down. I mean, you'll have to see if the GDP comes in weaker. Obviously, they'll push them. But like I told you, that's actually a little bit beneficial if the GDP only has a bear miss. Because once again, as I said at the beginning of the week, the Fed's hands are tied, so it's kind of like a Goldilocks scenario. Which I was surprised we got this low, but if you kept that theme in mind, hey, the Fed can't do anything. I keep telling y'all, if you keep that in mind also, I keep telling you, it's not a matter of being, as a lady says, being patriotic. But I'm saying if you keep that theme, but I keep saying there's nothing wrong with what's going on here in the U.S. It's everywhere else around the world. So if the market takes off and falls down here in the 1900s, and you keep that in mind, there's nothing wrong with going on here in the U.S. It's everywhere else. Then you're not selling down here. You're probably even buying. I mean, if you're not a day trade scalper, you're probably buying in here and saying, you know what, it isn't. I'll come in and buy. We've already sold off 50 handles, which we did. We got it around 1940 and make it all the way down here. So, as I said, if you keep that in mind, just like I said about the euro, if like I told you, everybody's looking for an upside breakout. There's no catalyst. And then the reaction to that German story, 45% of German bonds are not available for QE. And the market's already rallying, and it pulls back, and all it can do is add 18 pips. That already told you something's wrong with the market. So the same vein, if you come down here and say, wow, there's nothing really wrong with the U.S., it's everything else, then you're going to be a buyer here. You're more apt to look at the market from an opportunistic point of view from down here. My time frame is too short, so I don't see it like that. But I've been saying that. Now, that being said, how far can we pull back? We'll probably challenge this 57 at least. And probably if you get down to this 52.25, I'd be getting the hell out of Dodge there. Doesn't mean we can't break lower. Obviously, if the GDP, depending on how the market wants to interpret it, but my thinking would be if you get down to 52.25, I'd get the hell out of Dodge. Doesn't mean we won't break lower, but I tell you what, if you get that fill, we probably can get down there because then the market, this area will be supportive. A lot of volume there. People are going to try and buy this area. They may even try and take this beyond that. You see, here's 47. Maybe they dip down to 46.5 and rally, but I'm telling you, you're already in the hole. So I'd be using any pullback towards 52.25 to get out if you can get that low. Yeah, Pedro says I would be happy with 1958. Yeah, so here's our zone here. So I'll back this up. So you can see the significance here of what I have marked off as 57.75. So they might get as low as, you see the little hair here? They may get as low as, what is that? Yeah, 56.5. So you might get lucky with a quick dip. If you get that dip, then yeah, I'd be getting out. Once again, it doesn't mean that you can't, let's say by the end of the day, we could be trading at 46, and you're like, man, that was wrong. No, it's just saying that you're wrong currently in your position, so you can't think, okay, I'm going to try and squeeze. You could, but I'm just saying is, if you're fortunate to go and get sub 57.75, and I'm saying like 58, but we could pull as low as 56.5. If you get that, what you take this out and take as low as actually dip a little bit more, right in here, they take that one out, it's 55. If you get that dip down there, I'd definitely get the hell out of Dodge. It doesn't mean we can't keep on going, but more than likely, it'll be supported and the market will end up pushing up. Now you're looking at a 2-hour chart. When you look at the 30-minute, you can see now it's more pronounced. And that's where you see, wow, there's 53 here. Here's 57.75. So here's this little dip. It's not even much. So I'd say this area of 55 would be super well supported. If they can break below that, you'll probably see a lot of buying, then a spike back up towards 62.50, then a pullback. We'll have to see how this all plays out. And that's probably smart. Pedro says at 1957 I'd already be cutting out. So yeah, because if you're wrong, you have to be realistic. And the best way to look at it, even though maybe down the road you say, oh man, I could have hung on. But the thing about that is if you get out, let's say 57, and let's say it eventually goes down to, eventually let's say it went down to 48 or 47.25. But at least you say, you know what, I can trust myself. I've done that before. If I go, I wish I kind of would have hung on. Obviously, if they're expiring date, you really have less of a time to work with. But sometimes you're saying, it'll happen to me, and I go, oh man, I could have waited a little bit longer. I go, no, you know what? At least I know that I can trust myself because I got out. And that's more important to know that I'm going to watch out for myself and not make any stupid mistakes or anything like that. So we'll go and move into the euro. So we talked about this trend line here. And the trend line isn't super steep. I've seen trend lines on the euro like this. But what it should have done was we should have at least done this. Then this, just take out 36 by hair. And like that. We didn't even make it to 1070. And if you remember, it actually stopped here at the 23%. So when I was talking to Blake, and I remember talking to y'all too, is that, I thought this 1070, you'll probably see a little bit of action there. Some people take on a little bit of position, but you'll see more action being taken on at the 38%, which confluences here with the 1118. And if you think about it, when you look in context, you know how we talked at the beginning? We talked actually since last week, and then on Monday, and then even more strongly on Tuesday. Well, actually, it was on Monday. Real super strongly, we were talking about this. I know they put the low on Tuesday, but we were talking about this. And I probably, like my mom used to say, I probably sound like a broken record. But remember how much I harped on this. But I hope that helped y'all, because you probably say, "Oh my God, this dude is going to bring this up again." But we talked about this level. And we said even the most ardent bears would be covering. So it's really worrisome that from a huge level, It isn't like, here's the deal. I'll give you an example of what I'm talking about. It wasn't like the market fell to this level, because it's a slow week. So usually on Fridays, we kind of talk strategy overall. Okay, it's not like we fell to this level, we rallied up, we fell to this level, we fell to this level, and we rallied up pretty good. We fell to this level, and I'm saying, oh man, you know what, you got to be covered in this area. This is the bomb. I mean, there's going to be so many people covering. You're like, yeah, okay, whatever. This market has not been able to find a bid. Here's the fall, and look at this sick rally. Okay, so you're like, okay, well, I guess they're waiting for a better price to buy. We fall again, and you're like, so look at this sick rally. It doesn't even make it here, and you're like, oh, this is a little bit worrisome. I mean, I guess they're being like extra cautious, because remember how you said it was way overdone here, so everybody's being extra cautious. That's why. That's why we see a good rally here. We didn't get a good rally here on this fall. We didn't get a good rally here, but I bet the next one is just going to be awesome. And then we fall down here, and we literally get no rally. Like, where's the rally up to here? So when you see this down here to this area, you go, man, this market is going to react like nobody's business. I mean, it's just going to go gangbusters. Well, we did get a pretty good rally off that, and even then I told you, remember, we had talked about 50 to 75 pips on that day. But remember I said, overall, before we even got there, I said, overall, when we get there, well, realistically, we're probably going to see like around 100 to 150 pips. Okay, well, I guess we did get the 100 pips here. But I meant like the rally would probably take us to right here. We did get the 100 pips here, but that morning I was looking for 50 to 75. But the thing I was saying was like, we're going to get like 100 to 150 pips, meaning we're going to get at least to here, okay? And look, the rally ran out of gas, and now it just made this last hurrah on this big supposed breakout. And look, it's already fallen back. And the only thing that the euro can hang its hat on now, at this point, is going to be a bad durables number. Or some crazy saying out of the G20 that would be dollar negative. And I just don't see that happening. Why would the US say, yeah, we'll go along with this. Let's just say something that's dollar negative. Because everybody else will be saying, no, we want our currencies to be weak. So I just don't see where that's going to play out. That's what I'm saying. So if you put your ear to the ground and you're watching the reactions of the market and listening to the reactions, like that German bond story that came out, which when the euro rallied here to 1036, actually got to like 1040, and I was saying get out at 1034, we built back and we were trading it around the 1020s, 1025, 1022. When that story came out about the German bonds, 45% now, those were for QE, at the very least we should have made it to 1070. And realistically, we probably should have made it to like 1088. And the market only rallied up to 1043. And then, in reality, we only made it here, and then we crapped out. That already tells you something's wrong with the market. That's why I was arguing yesterday, hey, this market is not going to go up. I'm looking for failed breakout. But even then I thought we'd see some action here, but that we'd at least make it up to 1118. And then you should just see some short change. This is worse than a North Korean rocket missile launch. I mean, talk about a dud. This thing, any longs are hoping and praying that the U.S. durable goods comes in crappy. I mean, GDP. That's their only freaking hope. Because you sure as hell not going to get anything out of the G20 that's going to actually allow other currencies to rally against the dollar. That's the last thing they want out of the ECB. Anyway, it's time to go and take a break. Still got SPOO's 4 handles off that area that I tweeted out live when we were there. hit that target. I was looking for the market to ease off. Okay, so we're going to go and take a break, and we'll be right back around the corner to take a look at crude and other things. And thanks for joining us here on the European crossover webinar. Okay, everybody, and welcome back to the European crossover webinar. Let's look at some other markets. Obviously, we've got the cable having recovered from its lows somewhat. We talked about a reaction at that 40.25. I remember sharing that with Blake. You can see he was running here. We had 40.16, but there was also, if you look back here, we were talking about it right there. You see there? 40.25, right there. And market ran out of gas. 40.42. So, but I mean, like I said, I don't trade the cable, but I know that we wanted to go in and refer a reference to that because it's been in the news and it's such a hot topic with the Brexit and all that other stuff. We'll take a look at the dollar yen also. And I was telling Blake, I don't even understand what the hell's going on with this pair and why I haven't even tried to do too much with it at all whatsoever. We talked about this earlier in the week. I mean, when the SPOOs were at 1940, the dollar yen wasn't playing along. But when the SPOO sold off to 1908, the dollar yen barely even moved a little bit lower. And it actually didn't move lower until we made that move down to the 1891 area. And then we started recovering with that. I don't know what the hell's going on with this pair. I guess you could take a look at a fib. For me, I'm not even interested in touching it. I mean, because like I said, if you don't know what's going on, I'm talking about my own self, then I sure as hell don't need to be taking on this thing. I mean, here we are, 31.47. It's going to be the 61%. I mean, 13.47. And here's that level. Yeah, I mean, you do what you want. I don't want to do a damn thing with this pair. I mean, I'll mark it off, but I could care less what it does because it's been acting, rather goofy. So, I like to see a market that's going to react at least in kind to what I believe is going to happen. Maybe it's me. Maybe I'm just the one that's off. But like I said, you got to be careful and look at what what markets you're trading. We're seeing the crude back off a little bit from a key area. I tweeted that out on the Inside call as we were approaching. We hadn't got out there, and I mentioned the 1383. I mean, 3383 was a key level, and beyond that, 3402. Now, I did mention at the beginning of the show is 3494 is pretty key on the 30-minute, but we just couldn't make it up there. We did make a run back up to 3883. 3383, and we kind of pulled back, but you have to be a little bit cautious, as I was indicating on the Inside call I mentioned, is that now that, this is 1483, now that the market is really, and 3347 is support here on the 5-minute on the crude. Hold on. So 1489. Okay, mark that off there. You're seeing a little pop from that 33.47 on the crude. Not much, a little bit of a nickel, but if you were short, I mean, I would suggest covering from just a scalping perspective. Okay, so like I said, yeah, this 1347 is key. I thought I was going to make it at least to that. It didn't. I don't trust this market with a damn. Do what you want with it. I wouldn't trust this market as far as I could throw a damn elephant. Maybe they can make it up to 1364 and they'll kind of fail. I really have no idea what the hell's going to go on. So, I don't know. Especially for me, that I don't even know what the hell's going on. And then on top of that, this market's not even acting the right way. No way. Like I said, we have that BOJ meeting coming up. They may try and, I would think they're going to try and add a little bit of juice. So then maybe the market will feel like, now we are above that key level, that 1266, so maybe the market will try and defend that. And then we'll have to see. Once again, I wouldn't touch this market with a 10-foot pole until it got to 1394. 1430 is pretty key, but you might see a reaction against here. I don't have anything to do with it before then. Let it do whatever it wants. Y'all do whatever you think is best. I don't know what's going on. One thing I will say, it's back above this 1266 area, but other than that, I don't really have anything what's going on with this market. Euro's still dead in the water, not doing a whole bunch of nothing. I just showed you on the 5-minute, we're at the 33.47. I mentioned on the inside call, 33.83 was a reactionary level, as well as 34.02. Now we had 33.94 in the 30-minute. I was hoping, I actually wanted to short it against, I got a little bit too greedy here. It's my own damn fault. We made it up to 33.90, and I really wanted to short against, I actually even put the limit in at 33.95, I think it was. Yeah, I think it was 95. I didn't put it 97. I just got a little bit too damn greedy. We did go and pull back. I thought, okay, now they're going to take it here. And I said, let me watch it. If it gets to 97 and pull back. And we just ran out of gas once again, this 83, and we're pulling back. I'm being cautious. I warned on the inside call. It's Friday. The bulls had the momentum. You know they're going to, people are going to be trying to step in and buy this thing, so you have to be very cautious. We're going to take a look at the crude where we stand overall. We'll do that chart. Hang on. So here's the crude. I mean, I shared these charts yesterday because I was telling people, you know, crude is a very technically driven market. If you know your technicals pretty good, and I don't mean you have to, I mean, I guess people should use what they want. If they want to use oscillators, I don't. I just use the levels. You hear me talk about these zones, but I use the levels, Fibonacci, you know, and what I call price structure, which is kind of like playing into these zones too, but it's just the overall movement. So we'll take a look at it where we are on the 2-hour chart, and you can see where I was talking about 33.83, and you can see we ran into trouble at 33.83. And I did tweet this out yesterday along with the chart. When I was talking to another trader, I said, hey, the market is bumping up against the lower level of this zone, 33.40 to 34.29. And they were doing this right on the pit close. And you can see the market made up to, what, 49? And then we had a pretty nice back off. We actually went down like to 30. We even broke 33 and got like into 32.90s or something like that. It went a little bit lower. I'm saying not too far afterwards. I know it's obvious we did make it to 32.75. One of the things I tweeted yesterday, I said, if we get a close, and that was on this bar, if we get a close about 32.75 on the 2-hour, I go, this is freaking huge. And it was. You see, the market came up here, we closed here, we fell back like into the 90s, okay? You can see this right here, made to the 90s, all the way from 40 cents, 49, but the 40 was what I'm talking about. And we rallied them up. We couldn't make it to 20, and we came down here. And look where we found support at the 32.75. That's why I put a lot of stock on what I call these zones, and I came up with these zones myself. And the way I color zones, I know I see a lot of, not a lot, but I see a few more traders now color zones. I don't know where they got it from. I'm telling you, this is what I learned. I taught myself as far as this. I used to watch 50 Pips, and he'd say, okay, this area, and he'd have a lot of lines. I was like, I don't know what the hell's going on. And I would just keep looking at the charts and keep looking at them and staring at them and staring at them and staring at them until I felt like I could find some kind of rhythm that was going on. It was the same thing when I learned to scalp the euro, and I'd be looking at a 3-minute chart, and I would just keep staring and staring. I went like that for about at least 6 weeks, almost 2 months. I said, what is everybody else seeing? There's got to be something here. And then little by little, I start to see a rhythm and stuff like that into the market. So we are backing down here, right now to the 33.39. So we've had a nice little pullback, as the market was not able to get beyond this 33.83. That was a really an possibility we could push a little bit higher. But I thought it was a little bit too early, and that's why I was cautioning. As I said, I tweeted on the inside call, look for 33.83. Sometimes, as I did yesterday, I'll go in and share some levels on my main feed, but I just generally don't like to do that. But sometimes I'll do it where everybody's like, nobody knows what the hell's going to go on, and everybody's confused by the move. I'm like, screw it, I'll throw some levels out there until kind of show people it's not like I don't want to say it's easy, because it's certainly not easy, but there's ways to go in and, it's not mumbo jumbo. The market's just moving from level to level, and when it fails at a level, like we talked in here, and then we get a retest and different things, you can see this market release start to move and come apart and reassert itself. Then there's no follow through on the downside. The market rallies, it comes back to test. We find some support here, and then you think that the market's really overdone. So it's in a position to really launch itself, which is what we saw yesterday. And why, when we were coming up to the 61%, which was at, I believe it was, at the time was 32.60, I think, why I didn't think that would hold. I said, I've tweeted out, but the 33.43, which is the 78%, was where it really held, and this area. But I tweeted both of those out because I didn't think that it would hold. That's why I tweeted out that my target reactionary point, which I shared with y'all on the webinar yesterday, I was looking for 33.10, and the market stopped at 33.14 before it sold off 40 cents. So let's take a look over here on the 30-minute. Denise says, can you take a look at bonds? Andrew says, what kind of level is it you have at 33.47? Not sure what you're talking about, unless you're talking about the 2H. I don't see anything here at 33. Oh, what I just said, that was on the 5-minute right here. You see how the market broke down here? And I said, this is a support level here on the 5-minute. So if you look down at 5-minute, I'll show you where I came up with that. But like I said, that's for scalping. So you see here, that's where I'm coming up with the 33.40. And it goes beyond that. It goes back, like way back. I try and see there's 47. You see how it's coming across all the way across? That's what came up with that. Now, what I was saying was, if you're short from up in here on twice, this is a very good area to go in and cover. And you can see it bounced up. It didn't bounce up a whole lot. Bounced up like to 57 cents, right to 10 cents. But if you look at a little bit bigger picture, because we're failing here, the market has a chance to push lower. Now, this 33.32 is pretty decent. Actually, if you remember, I think it was actually I tweeted this out on my regular feed. When I was talking about remember when we launched up, if you check my feed, I said 33.32 is a minor resistance level. And then I talked about the 33.47 to 34.30 zone. Now that was on the bigger 2H here. When we were making that move, actually it's on the 30-minute. When we were making that move on the way up, you see I said 33.32. That was also my 5-minute. So when we made that move up here, that's here. I said 33 is a minor level, and then I said the more key level is 33.57, but we're at the bottom of that zone. And then you can see here that the market only tagged on another 13 cents before it ultimately ended up coming back Even if you got short against 33.32, which as I said was only a minor level, you still made close to 40 cents because we dipped as low as the 90s. Actually, it looks like we got here to 89. Okay, so but like I said, the idea that we're having trouble up here and they really tried, then they'll push them lower. I wouldn't see a whole lot. I mean, maybe we can make them dip them. Take a look here on the 5-minute. Yeah, 33.20 is about, if you were still hanging on, that's about the most I've been trying to squeeze out of this. Now 33.08 is pretty freaking huge. You can see that. And I haven't even updated, I have not updated my charts other than what I do in the mornings, you know, since the 5-minute chart. I'll give you an example. You see how the levels are way the hell off here. You see, all I do is I grab the levels and I just move them over to whatever level. So my levels have actually stayed the same. You see how they're all backed up here? And every morning I got to move them all over. But it helps me because if the market breaks to a new area, just like it did yesterday when it was rallying, I already have the levels. I can already say, you know what, blah, 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 I'm looking for this level, just like I did yesterday on the way up. And I remember this run up here, and I said, I've got 33.32 as a minor level with 33.57 as the key level. Well, that's what I was already ready. I wasn't like thinking about it. You see what I'm saying? And then you had a very nice shooting star, and then we saw that pullback to 32.89. So that's what I'm saying. I look at 3 different time zones. I look at a 2H, a 30-minute, and my 5-minute. And then I'll also look at the footprint, not always as much, but if we're coming into a key level, I want to see how many people are giving up. You see what I'm saying? As we move in higher, are we seeing a lot of volume of people basically hitting the bid on the way up? And that would be the blue. Because if they're covering, if it's near a, give me an example here. You see here, I'm just going to use an example, 33.69. You see how, on this side, they're hitting the bid, so it's almost like in reverse. So people are short the market, and now 82.75, 96.44, 43.36, 96, still not too much out of whack. 35 to nothing, 30 to nothing. What that tells you is people are saying, buy them back, buy them back, buy them back, because they're in the hole and they're short. And then ultimately, you see how, and there we go. As we made it up to 90, this is what I'm looking for. Now, as we came up here, it was kind of like even Steven. That's what I was trying to see if I could squeeze a little bit more. It's my own fault. What I'm saying is, when you come up to these levels, you're looking to see if you can see not outright capitulation, but from a very short-term period, where people are saying, "Get me the hell out." Look at this. Look at this. This is where that was my mistake. I was looking to short. I had 33.94 on the 30-minute. You see that right here? Here's a good example. I was doing some other stuff, but that's my own effing fault. So I'm looking at 30. I told you about 33.83. Here's 33.83 on the 2-hour, and I tweeted that out on the inside call. I'm saying, okay, 33.83 is a pretty key level, and you can see that's huge because it's on the 2-hour. And I was also had 33.83 on the 5-minute. You can see that here, okay, right there. And here was 34.02, but I said, look, there's 33.94. So I get greedy, like a greedy F, and I'm thinking, man, I'll just put my limit right there. I want a top ticket, which is still pretty stupid. But here's what I should have paid attention to. When it gets up to 33.90, look at this. Now that's right there at the high. You get 169 buys to the sells, meaning these people are saying, oh my God, we're going to 34, we're going to 34.50. Oh my God, maybe we're going to $50. So these people all bail out, 169 to nothing, hitting the bid. And there's your capitulation, you see? And I had 33, I tried to punch it to 33.94. That's what you look for, is the confluence. So then, boom, you step in here and hit the, hit the market. You see what I'm saying? If you have that and you're already looking, you go, okay, on the 2-hour, I got 33.83. That's pretty key. I can see the market had some pretty good trouble here at 33.83. You see all the touches? I'm probably going to see a pullback against 33.83. Then you look on here. On the 5-minute, I got 33.83. That's confirming. It all looks good. Man, can they punch it a little bit higher? Wow, I've got 33.94 on the 30-minute. You see right here? Pretty key stuff right here, 33.94. So I did try, I did put my stupid limit at 95. I didn't get hit. But here's the deal. At 33.94, now I'm not always looking at the footprint, but here's the advantage of the footprint. At 33.90, look, we saw this here. At 33.90, 55 to nothing. People are just going to get me the hell out, cover my shorts. And then the next 5-minute bar, 33.90 again. People at 169 to nothing, just get me the hell out of this market. So, oh, you know what? Blake's already here. So hang on.
I'm here. Go ahead, Paul. I'm not. I'm gonna let you go. I'm gonna let you go on, man.
Okay. Well, I was just talking about how I use. You know, I was telling people on my inside call. I tweeted out. I go, hey, 33.83 is a pretty key level, and beyond that, just 34.02. And we were trading like I think we're trading like 68 or something like that. Because basically, I never tell people buy, sell here because I don't know what's, like you always say, someone's risk parameters, and then they go crying like a little bee later on saying, oh, I wish you hadn't told me that, and then, you know, want to bee slap them. So anyway, so I tweeted out this 2033. I didn't tweet it on the regular feed. But I tweeted on the inside call. I said, hey, 33.83 is a key level. And beyond that, we got 34.2. So here's the 33.83. You can see we're coming up here. That's pretty key on the 2-hour. Now, on the 5-minute, which I use a 2-hour, a 30-minute, and a 5-minute. So on the 5-minute, I had the 33.83 from way back here from Moses across the freaking desert. So anyway, so I had the 33.83 here. Let me just adjust this right here. So I had that 33.83. So I was telling everybody, so I looked on my 30-minute, and I said, wow. Maybe they can squeeze them up to 33.93. I'm always such a greedy idiot because I actually was looking to short, but I was like, oh my God. I put the order in at 33.95 like a bozo. I'm like, oh my God, I'm sure they'll make it here. They may even get up to 33 because yesterday I said 33.10 and I was able to sell against that and the high was 33.14. And I called that, like the market was trading like at 32.70, and I told everybody, hey, the key level I'm looking for is 33.10 is the reactionary level. So people had a chance to play to the long side of 33.10. I didn't. I was just looking to get short against 33.10, and we immediately fell off 40 cents. So I was doing the same thing here, and what I was telling people is I don't always use a footprint, but here's how you can use a footprint. So as we came up to 33.94, we're coming right here, and you look here on the footprint, and these are the buys and the sells, and you're thinking, okay, well, that's the sells here. No, it's really that they're hitting the bid. They're hitting the bid, and that's what's in the blue. And these people that are short the market, they get up to 33.90, and look at that. They hit the bid 55 to nothing. These people are, you have to look at it in a reverse way. They are capitulating. They're like, oh, my God, get me the hell out. It's going to $34. Oh, my God, it might go to $50 by tomorrow. And then on the next 5-minute bar, 169 to nothing. These people are capitulating like nobody's business. So that's where you can use a footprint against some key levels. We talked about the 33.83 at the time. I tweeted that out when we were trading at 33.68. And the 34.94 was the 30-minute, so you had the opportunity. And then we saw a pretty nice sell-off. Now on the 5-minute, I have to say that on the 5-minute, I said, hey, look, 33.47, now we're selling off. This is a great area to cover, which we bounced 10 cents, but we went lower now to 33.32. But of course, we were filling on a 15-minute, so of course you're going to see a little bit more pull. I just wouldn't expect too much beyond 33.20 for those that are trying to push it. One thing I will say yesterday, remember we were talking about the dollar CAD, we were talking about the 61%. I thought the 36, I will say, if I make a mistake, whatever I'm going to say, I gave myself credit for telling people to get short at 38.50, above 30.50 on the stop run. And then I said, you know what, we're probably going to hold 36.16. We'll probably jump about 70, 80, and then we'll go to 61%. Well, we didn't. I mean, we got to 36.16, and I guess we rallied them up to what, 36.50. But I said we'd probably get up to 36.80, and then we see. So I blew that call. You see what I'm saying? But we're here into this 61% we talked about, and then we've got this zone that we talked about. They've got a nice zone. You see that zone? And I did tweet that out. I go, the support there is at 61% and that zone. That zone is 34.93 to let's see, 35.25. So I think we're in a key level for dollar CAD. Obviously, I guess it's going to be what all happens with crude. But anyway, that's all I got.
All right. Well, I'm just happy it's Friday. I mean, and I know I've only been here a limited amount of time this week, but boy, I'm happy it's Friday. So.